Good morning, traders. Welcome to the TMT Stock Market Strategy video for Monday, January 4th, first day of the new year, 2016. Want to kick off the video by saying Happy New Year to all and hope all your dreams and wishes come true. I do believe 2016 can be a very exciting year for trading. Markets are on the verge of topping, if not topped already. I haven't called the top yet, but I'm very close to. We'll see what happens in the next coming days, at least this week and going into next week. Real quick recap, as you know, S&P up very small, 0.73%. NASDAQ up about 6%. That was really because of that February jolt up and kind of held its gains throughout the year. But we are coming into seasonality trends, and I want to get into that, as you know, real quick before we go through our analysis on our indexes. You know I'm a good follower of the seasonal trends, and pick up the Traders Almanac, guys. You'd be doing yourself a big blessing. All right, the first 6 months usually is the best for the markets as far as gains are concerned, but the first 6 months are the best for gains. But the first 2 months, January and February, they push out a very small gain, if that. So that's going to be interesting because January and February should set the tone at least. We should get some sort of a decent pullback, if not a full-fledged correction. And we'll see what happens here, okay? Best sectors for January is going to be healthcare and technology. And reason why, there's two conferences and shows going on, JP Morgan Healthcare Conference. That's why I usually bid up healthcare stocks, and the CES Electronics Show, which is huge. That's also in play as well. Worst sectors is going to be consumer staples and materials. And reason why is the U.S. dollar comes into some seasonal strength as well. And that's why I say, as far as oil and gold, guys, remember, we do our analysis in our premium video on oil and gold as well. I think you're going to get strength in the dollar that's going to push the market, push the dollar higher, and get us to a point where we'll break that 100 in the GLD or that 1,000 in the GC contract. And crude oil, we should be looking at $32 to $34 in the CL contract, which is the futures contract, okay? So just keep that in mind. I am watching that, hawking that. I think that's going to be great trades for 2016. I also think that as of right now, my analysis has not changed from a few weeks back. That I think that we're in an area where we are going to be correcting, and I definitely think that the markets are in trouble. You cannot have the transports and the Russell not move and the markets move higher. Now they could move higher, but not going to move. They're not going to rally to new highs. Just not going to happen. And we also have China, which is in trouble. And I think China is also going to be that canary in that coal mine where they're just going to get crushed. And I think that's going to really put a trickle effect into worldwide markets. So we need to really pay attention to what China does. Now, we're all day traders, most of us are. But nonetheless, whatever your time frame is, you still need to know what's going on around you. All right, real quick, McClellan Oscillator. Just want to show that to you. When we get overbought right to that Bollinger Bands, we usually pull back. Same thing when we get into an oversold state. And as you know, we're right here at 9, so we're neutral. That means that, what does that tell me? When I want to show this to you, that we have plenty of room to run to the downside before we actually become oversold. So this is a sign to me that if we're going to get short, we get short, and then you could stay short for the longer term perspective, or at least ride the short out pretty much most of the day. All right, but again, 9, which is neutral at the moment, okay? Plenty of room to run to the downside. All right, let's take a look at our indexes. Now, I've been showing this to you pretty much all of December. You can see we have this massive, possibly bull flag, and really can be, as long as we're inside these upper and lower channels here. But look what's happening. We had that M formation that we showed you. We did break ever so slightly, ran back up, retested it, broke again. So this, to me, is just getting a little bit long in the tooth. But what I wanted to point out is lower high, lower high, lower high, lower high. This is not a good sign when you're making lower lows and lower highs here, okay? Same thing with down here. So the next target is going to be challenging that 200 in the spiders or 2,000 in the ES contract. All right, so this is going to be my target here. And then we would reevaluate it from here. Okay, look at what's happening here in the RSI. Lower lows, lower highs. MACD, same thing. Cannot break back above this. We need to break back above it, maybe back test and start to make higher highs and higher lows on our oscillators. And then maybe we can go back and challenge the highs. But as of right now, we're not doing so. and look at our Bollinger Band starting to pull in. That means energy is building here, guys. So I think that there's going to be something exciting. Watch out for the fireworks. All right, transports. I put this out to you guys last week. Bear flag. We broke bear flag on Friday, and we are down pretty substantially right now in the ES. So that's going to put the transports down here with follow through. You can see the Bollinger Bands are also pointing lower. And I think, guys, I honestly think that the next area is going to be this August lows. And we're close to it. And I think it's going to happen. I really do think it's going to happen. I think the markets are really trying to force itself to move higher, but there's not enough buyers at these levels. All right. Russell 2000, same thing. Bear flag. We broke the bear flag on Friday. And I think we're going to be testing this area here, this low, and then we'll go for, we're going to be looking at this low here. So this is the next low, and then, of course, this will be the next target low once we break this area here. All right, that's going to be the area, the next test. And then a break lower, we're going to hit this low here. And that's where we're going to be looking for, okay? All right, now let's take a look at the Dow Jones, and as you can see, same thing, bull flag, but really getting long in it too. It looks like more of a downtrend channel now if I take this away here. But we always want to look and compare analysis and see, repetitive patterns in all the indexes. And right now, they're showing me, that M formation you can see here. And then, of course, these same thing, lower lows and lower highs, right? Here, 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 and here. So lower lows and lower highs. Right, same thing here, and now next target is going to be right here. That's going to be the target, and they all line up perfectly. So I do see some weakness for the next few days. I don't think everything goes straight down and or up, but I do think that the next target, same thing with the Qs, is going to be here. That's going to be the next target. Now, what I want you to look out for are the high beta stocks, these names with the Amazons, the Googles, big cap tech. That's important because when you get something like big cap tech that's been kind of holding on pretty much all year, and all of a sudden now what's happening is that you're not getting it, that's something that you need to really need to watch out for, okay? So keep an eye on that, and I hope it helps today, guys. Welcome back. I'm really excited to be back, and we'll see you tomorrow. Take care.